Welcome to the Deep Dive, your shortcut to being truly well-informed. In the bustling world of precious metals, identifying the right opportunities, especially for American investors, it kind of feels like sifting for gold sometimes.
It really does.
Today, we're doing just that, zeroing in on a company that's been making some waves. Avino Silver and Gold Mines, ticker symbol ASM.
Yep, ASM.
Our mission in this deep dive is, well, to quickly yet thoroughly unpack everything you need to know about ASM as a potential investment. We're sifting through the latest financials, news, trends, expert takes. We took your research pile and sorted it for you.
Exactly. And this isn't just about, spitting out numbers. It's about getting into the why behind them, understanding the market's reaction.
Right.
We'll look at, strengths, the risks, and there are always risks in mining, and what the latest developments might signal for their future.
Yeah.
It's actually fascinating how one commodity price can just ripple through everything.
Yeah, performance, sentiment, the whole deal.
The whole deal.
Okay, so let's start at square one. For an investor maybe just seeing the ticker, who exactly is Avino Silver and Gold Mines? What's their main thing?
Sure. So Avino is a Canadian mining company, ASM, on the exchange. Primary focus, like the name says, is silver and gold.
Makes sense.
Their main operation, really their heart, is the Avino compound property down in Durango, Mexico. That's where they're pulling out silver, gold, copper, and zinc.
Okay, Mexico.
Yeah, and it's really crucial for anyone looking at this space to get that mining companies, just by their nature, have significant risks baked in. Commodity prices swinging wildly, production hurdles, tricky regulations.
Right, lots of moving parts.
Exactly. All that stuff can hit performance hard.
So it's not just digging stuff up. What's the full picture of what they do?
Yeah.
And you mentioned the Avino mine has history, decades, right? Does that stability kind of balance out needing to always look for the next big find?
That's a great point, because yes, the Avino mine has that long history. It gives them a base. But honestly, for a mining company's long-term story, it always comes down to future potential.
So their core business is that whole cycle, exploring for new deposits, developing them, the actual mining, and then processing the ore. History is good, provides some comfort, but it's the exploration success that gets investors excited about growth down the line.
Okay, let's dive into the financials then, because like you said, mining revenues can swing wildly with commodity prices. What's the recent snapshot look like for ASM?
Exactly. Price sensitivity is key. Looking at Q1 2024, revenue was $10.63 million. That was actually down a bit from Q1 2023, which was $11.66 million.
Yep.
Full year 2023 revenue came in at $46.12 million, and that's mostly from, silver, gold, copper, and zinc sales.
And the bottom line, profitability.
Well, they reported a net loss in Q1 2024, about $500,000, $0.51 million. That's compared to a profit just under $1 million in Q1 2023.
So a swing to a loss.
Yeah, and they finished 2023 with a net loss too, around $5.5 million. But losses aren't exactly rare for miners, especially with all the cash they pour into exploration and development.
Right, those upfront costs. Exactly. Their cash position, end of March 2024, was about $11 million. Crucial for liquidity and the balance sheet. Total assets around $146 million. Total equity about $142 million. They tend to keep debt relatively low, which is a positive.
So for an American investor trying to read these tea leaves, what's the main takeaway on their financial health right now?
The core takeaway. Well, they're unprofitable currently, but you absolutely have to watch their cash flow and debt. Mining just eats capital.
Yeah.
The silver lining, maybe literally here, is that rising gold and silver prices could really boost their future profits. That's the big lever. If prices stay strong or climb, things could look quite different.
Got it. Okay, let's pivot from the dollars to the dirt. What are they actually producing?
Yeah.
And what do those numbers tell us about how efficiently they're running things?
Sure. So revenue-wise, silver is the biggest chunk for them, then gold, then copper and zinc.
Yep.
In Q1 2024, let's see, silver production was about 248,000 ounces, gold almost 1,400 ounces, copper just over 500,000 pounds, and zinc about 1.5 million pounds.
And how does that translate overall, like in silver equivalent?
Right. The silver equivalent ounces, AEQ Oz, that came in at about 656,000 for Q1. That was actually down noticeably from Q1 2023, which was over 825,000.
Okay. It dropped there.
Yeah. And a really critical metric you always need to watch is the all-in sustaining cost, AISC.
Right, the true cost to produce.
Exactly. And for Q1 2024, their AISC per silver equivalent ounce jumped to $20.94. That's up from $17.39 in Q1 2023.
Wow, that's a significant increase.
It
$20.94.
is. It points to either lower efficiency or, maybe more likely, just rising costs across the board. And at nearly $21 an ounce, it definitely squeezes their margin against current silver prices, makes them more vulnerable if prices dip.
So Q1 sounds like it was pretty challenging then. Lower production, less revenue, higher costs.
Yeah, overall, Q1 2024 was definitely a tougher quarter for them on those key metrics.
Okay, so given they're not profitable right now and mining is so capital intensive, how should an investor evaluate ASM? Like a standard PE ratio doesn't seem very helpful here.
You're spot on. PE is meaningless with losses. What's more relevant is maybe their price-to-book ratio, PB. That was around 0.5 to 0.6 times back in March.
So below 1, what does that usually suggest?
Well, a PB below 1 can suggest the company might be undervalued compared to its assets on the books, or it could just reflect, ongoing weak investor sentiment. Hard to say definitively.
Right.
And like we just discussed, that AISC is critical, $20.94. There's still breathing room with silver prices up near $30, but that rising trend, that's a concern, definitely.
Long term.
Long term, it's all about the resource and reserve estimates. That tells you how much metal they think is in the ground, how long the mine might last. That's the future value proposition.
Gotcha. And what about dividends for investors looking for income?
Yeah, Avino doesn't currently pay dividends. That's pretty standard for mining companies, honestly, especially if they're growing, exploring, or like Avino now, operating at a loss.
Reinvesting everything back in.
Exactly. Profits usually get plowed right back into the ground, metaphorically speaking. So for you, the investor, you're looking for potential share price growth here, not income checks.
Okay, this is where it gets really interesting, I think. The latest news, the Q2 2025 production results came out recently, right? What did they show, and how did the market actually react? Because that seems key.
It is key. Then, yeah, the story gets kind of nuanced here. They announced Q2 production on July 22nd. Silver equivalent ounces were 645,602. That's up 5% year over year.
Okay, positive year over year.
Yes, but here's the really standout number. Record quarterly mill throughput, 190,987 tons. That's up a massive 36% from the year before.
Wow, 36%. That signals some serious operational improvement, right?
Absolutely. It points directly to better efficiency in their processing plant. Gold production was also up 17%, copper up 12%. But, and this isn't important, but actual silver production, their main metal, was down 3%.
Huh. So ADEQ up, but pure silver down slightly. Interesting.
It is. Now, despite those strong operational numbers, especially the throughput record, the market reaction was, well, pretty negative.
Yeah, what happened?
As of July 28th, the stock took a big hit, dropped 7.2%, and that just accelerated a decline that had been going on for about 2 weeks.
Ouch. Why the drop after seemingly good operational news?
The main culprits cited were, 1, a general dip in silver prices overall, and 2, just lingering worries among investors about the pace of future production growth. Plus, some analysts started talking about the stock being potentially overvalued after it had rallied earlier, and you know what happens then?
Profit taking.
Profit taking, exactly. And to add fuel to that fire, Roth Capital actually downgraded them from buy to neutral just before the production numbers came out on July 16th. That definitely didn't help sentiment.
Man, that really is a mixed bag. Record throughput, but the stock tanks. How do you even interpret that as an investor? What's driving the bus here? The operational win or the market gloom?
That tension is exactly the challenge, right? The operational efficiency, that record throughput, that's a genuine long-term positive. It shows they're improving things internally.
Right.
But the market's immediate reaction, clearly driven by external factors, it tells you just how sensitive these stocks are to broader sentiment and commodity prices. The overvalued narrative and the silver dip just overwhelmed the good operational news, especially for a smaller company like ASM that's prone to sharp swings after a run-up.
So perception and external factors kind of trumped internal progress in the short term.
And the short term, absolutely. That's the reality investors face here.
Okay, what about the overall vibe, the market sentiment around ASM right now, and the supply-demand for the stock itself? Is there a clear trend?
The sentiment is definitely mixed. Like a tug-of-war, you've got some analysts who are still pretty bullish, looking at those operational gains and long-term silver forecasts. Some see silver going much higher. They've even raised price targets.
Okay, the optimistic view.
But then you have that overvalued chatter. And interestingly, Simply Wasim pointed out significant insider selling over the last 3 months.
Insider selling, that usually raises eyebrows, right?
It can, yeah. It could suggest management thinks the price is a bit high, though people sell for lots of reasons. Still, it's something investors notice.
Sure.
On the stock's supply demand, that higher trading volume during the recent drop, that points pretty strongly to selling pressure taking over. And being a smaller mining stock, ASM is just more sensitive to what individual investors are doing, often based on silver price moves, compared to big institutional shifts. Their share count, for context, is around 146.5 million outstanding.
Right. Okay, let's zoom out a bit. Avino doesn't exist in a vacuum. What are the big picture trends in precious metals and mining overall that investors need to keep an eye on?
Absolutely critical context. First, obviously, commodity price volatility. Gold is your classic safe haven, inflation hedge. Silver. Silver's interesting. It has the safe haven aspect too, but also huge industrial demand. Think solar panels, EVs.
Right, the industrial side is big for silver.
It is. And notably, silver's actually been outperforming gold recently. Some forecasts are pretty bullish, maybe over $40 an ounce long term. Copper and zinc, though, they're much more tied to global economic growth, the industrial cycle.
Okay, prices are key. What else?
Rising production costs, this is hitting the whole industry. Diesel, power, labor, gear, it's all gotten more expensive. Costs are still elevated, even if the rate of increase slowed a tiny bit recently.
So that AISC pressure isn't unique to Avino.
Not at all. Then you have ESG pressures, environmental, social, governance. That means more investment, higher operating costs sometimes. Plus, declining ore grades at older mines mean you have to work harder, spend more to get the same amount of metal out.
It's like a lot of headwinds.
There are. But there's also technological innovation pushing back. Automation, data analytics, helping improve efficiency. Avino's recent mill throughput jump fits right into that trend.
Okay, that makes sense. And how do the really big macro forces, inflation, interest rates, global politics, play into this for someone looking at ASM?
Oh, they're all woven together tightly. Inflation and interest rates are huge. Inflation can push commodity prices up, but it also jacks up operating costs, as we said. Higher rates generally make gold, which doesn't pay interest, less attractive compared to bonds.
Unless inflation is really raging.
Exactly. If inflation gets really bad, that safe haven appeal can actually spike demand for gold and silver. Everyone's watching the Fed, waiting to see when they might cut rates from that 4.25, 4.50% range.
Right. Dollar strength.
Yep, U.S. dollar strength. A weaker dollar usually helps precious metals, makes them cheaper for buyers using other currencies. That recent dollar rally we saw in July, that could put some downward pressure on metals prices.
Okay. And global economy, politics?
Global economic growth directly fuels demand for copper and zinc. And geopolitical instability, U.S.-China trade talks, potential tariffs, election outcomes, that stuff tends to boost safe haven demand for gold and silver.
And for Avino specifically, Mexico.
Crucially, yes. Political risk in Mexico. Since all their main assets are there, any changes in Mexican mining laws, taxes, regulations, even whispers of nationalization, however unlikely, that's a massive risk concentration you absolutely have to factor in.
Okay, really drilling down now. Let's talk specific risks for ASM investors, how they stack up against other miners, and what their own internal strengths and weaknesses look like.
Perfect. Let's break down the key risks. We've touched on many, but to recap, high commodity price volatility, their revenue lives and dies by metal prices. Operational and production risks, ore grades varying, equipment problems, labor issues, and that recent dip in silver output specifically, all concerns. Increasing costs, that rising AISC hitting profitability, exploration and development risks, new projects like La Preciosa cost a lot, and there's no guarantee they'll pan out as hoped. Delays, cost overruns. They hurt.
And Mexico.
Geopolitical and regulatory risks magnified because they're all in on Mexico. Financing risk being unprofitable means they might need to raise cash, potentially diluting shares or taking on debt. And liquidity risk, as a small cap, the stock can swing wildly on lower volume.
That's a hefty list. How do they compare to, say, the big guys or other specialists?
Right. Competitive landscape. Compared to large diversified miners like Barrick or Newmont, Avino is way smaller, less financially strong, less diversified, more vulnerable maybe, but also potentially higher growth if they hit big. Versus mid-tier precious metal specialists like Pan American Silver. Those guys are bigger, usually have multiple mines, so they spread their risk better than Avino with its single main mine dependency.
So what's Avino's edge, if any, and what are the clear disadvantages?
Their edge. The established Avino mine provides a base. And that recent record mill throughput is a definite plus, shows operational focus. But the reliance on one main mine and a thinner financial cushion are clear disadvantages. Success really hinges on squeezing efficiency from the current mine and bringing La Preciosa online successfully.
And internally, assets, operations, management.
Internal capabilities. Their core asset is the Avino compound, a proven producer. La Preciosa is the big future growth hope, lots of silver potential there.
Right.
Operational efficiency. That record Q2 throughput is a really strong signal. Shows investment in improvement, automation maybe, which could lower unit costs. That's promising. Management and financial acumen, expertise is key, obviously. But that recent insider selling we mentioned, it does raise a small flag. Makes you watch their short-term outlook, and managing finances efficiently is absolutely critical when you're operating at a loss.
Okay, so putting it all together, where does this leave you, the investor, looking at Avino? Let's try to boil down the upside and the downside.
All right, the upside. You've got a verified working mine. They stand to gain a lot if precious metal prices keep climbing, driven by inflation fears, safe haven buying, industrial silver demand. La Preciosa offers real growth potential down the road. Those operational improvements, like throughput, are encouraging. And that low PB ratio might suggest it's undervalued.
Seems like a decent bull case.
It is, but then the downside and risks. Heavy reliance on volatile metal prices. Rising costs, that AISC trend. Currently unprofitable. All the inherent risks of small cap mining, less financial buffer, stock volatility, exploration uncertainty, plus the Mexico concentration risk and that recent insider selling. You have to weigh both sides carefully.
So what's the bottom line advice for someone considering ASM today?
Short term. The stock might stay choppy. Silver price moves, profit taking, those overvalued worries could keep pressure on, even with good news operationally.
Okay, and longer term?
Long term, if inflation stays sticky, if safe haven demand holds up, if industrial silver demand keeps growing, Avino could do well, especially if they nail operational efficiency and successfully develop La Preciosa. Lots of ifs, though.
So for you, the investor, thinking about this.
Yeah, for you. No, this is high risk, high reward, only suitable if you have a high risk tolerance and understand mining.
Definitely not for everyone.
Not at all. Closely monitor silver and gold prices. They are the absolute key. Watch that AISC trend like a hawk. It tells you about their real cost efficiency.
Right.
Consider it only as a small slice of a diversified portfolio. Don't bet the farm on any single small cap miner.
Wise advice.
And always, always do your own research. Check the company's latest reports, filings, news releases yourself. Investing in ASM is basically a leveraged bet on precious metals, but you need to be eyes wide open about the specific company risks involved.
What really stands out to you from digging into Avino today? It really hits home how many layers there are, right? From the mine site details right up to global economics.
Absolutely. What stands out is that constant tension, that dance between what a company can control internally, like improving mill throughput, and the external forces they can't control, like metal prices or sudden shifts in investor sentiment. That interplay really defines the journey for a stock like this.
It's a complex picture for sure.
It really is.
We hope this deep dive helped you connect some of those dots, maybe feel a bit more informed about the complexities and the potential surrounding Avino Silver and Gold Mine. If this deep dive was helpful, if it clarified things for you and gave you some valuable insights, we definitely invite you to subscribe to the deep dive for more analysis like this. We're always trying to cut through the noise and get straight to what matters for you.